Good morning. Ira Epstein of Linn Associates with your morning flash update for this Friday, the end of the trading week, March 1st, though, 2019, and the time getting on to 9:30 a.m. Central Standard Time. So as I'm looking at the markets and you're up, the economic data today didn't look all that good to me. I'm questioning why we're up like we are. I get that the copper market's up because there's still the trade talk with what's going on in the U.S. If I step over here, you're still getting pressure in the bonds and the notes as they're falling. Now, I've got the Marches here. I'm going to get rid of all the Marches today, and I'm going to move now to the Junes, which is where I think you should be trading. If you take a look at the dollar, it's stronger today, and part of that is that the question on the balance sheet runoff from our Fed is a big open question. You know, how you do these balance sheet runoffs are a form of monetary policy tightening. Yeah, it's a tool. And the question is the Fed going to let it keep running off, which is less money there, and they're not buying other treasuries and so on? That becomes a form of tightening, if you will. Buying them, well, you're putting more money back in the economy. In the grain market, it's still a sea of red, as this market still doesn't have anything bullish in the way of new news. And in the energies, down a little bit, but OPEC continues to cut supply back. So let's take a look, if we can, at the morning data, why I'm saying I don't see what's so positive. The ISM U.S. manufacturing came in at 54.2. They expected 55.5. Prior was 56.6. That's down. You're down a fraction in the prices paid to 49.4 from 49.6. The Waters Index 55.5 versus 58.2. So anything over 50 is still a good number. But they're slipping backwards towards that 50, not really advancing, and you can see that right through it. Now, the market groups, U.S. final manufacturing sector PMI came out at 53. They expected it at 54. Again, you're still getting the expansion, but not at the rate that we were getting before. University of Michigan Consumer Sentiment Indices came out at 93.8. February's prelim, 95.5. They expected 95.8, so that's a miss. Current conditions, 105.8, way down from the 110 in February earlier. Expectations index, 84.4. The preliminary was 86.2, so I consider those down a fraction too. Then we get to the personal income and spending. Your income was down 1/10. They expected it up 3/10. That's a miss. 2018 December. Remember, we still have some of these crazy reports because the government shutdown was up 1%. That was expected up 4/10. So that number was good. It fell back in January. And as we can see, December's personal spending was down 0.5. They expected it up 3/10. But December numbers are already so late that I don't think they're going to impact the market. You've still got this craziness with the Eurozone data too, but they weren't shut down. Their numbers, their core CPI 1.5 versus January's 1.4, so that's a little better for them. Jobless numbers fell by 23,000, and the PMI forecast for February, 49.2. That's contraction because now it's back under 50 from a 50.5 reading. So that's why I'm questioning. I'm looking at this rally going, why? And, you know, just one of the things that you do as a trader. But one of the other things that we do is we've put together a kit for you. Now, in the kit, there's a lot of information. First off, when you sign up, if you wanted to see and get a sample of my daily commentaries, you can do that. For those of you that would want some of my other research, if you haven't had it, a way to get it. But if you're learning about futures, I want you to look at all these different parts to this. When you go to the exchange brochures, the exchanges are always updating them. We point you right to the key sites, and you'll have quizzes, little things to learn with. Chart patterns, I always think important. My concepts of money management, technical analysis, that's all going to be in here as well. And this is just how some of it works. This is the history when it all began. This is very important, how the typical chart patterns form out. Technical analysis, understanding that when you're working with leverage, the fundamentals are wonderful, but when you get 90% leverage, the game changes rather dramatically. How to trade options on futures, why to look at them. Cause and effect has to do with money flows through an economy, something you should look at, the M1, M2, M3. And then we have a three-part series on our pivot points. We have our Roon indicator, A-R-O-O-N, our Roon indicators. They'll teach you how to see if a market is staying in a trend or not. This gives you an idea of the educational brochures from the CME group, what they look like, and they are in great detail with many, many different subjects covered for you. It is a kit. It comes as a link, so it's not going to come by regular mail. It's going to come via an email to you. It will even include in it our charting software. If you want our mobile applications, they're in here as well too, for your, be it for your iOS or your Android phones. You will need a user ID and password. We'll get that to you as well. Call my staff. You can go to our website, and while you're on our website, you'll see our carousel of free offers. Choose anything else you might want there. And of course, you can always get there if you're watching me on YouTube by clicking on this link. It'll take you right there. I'm Ira Epstein. You have a good day, and I will talk to you all on, let's see, that'll be Monday, not tomorrow. But I will see you this afternoon with our end of the week versions for all the different market of our videos. Take care.